channel here at Financial Hub and the 5th episode of our Forex market breakdown. This week on the fundamental space we have interest rates, beginning tomorrow where we see the Bank of Canada release their interest rate decisions. Last month in September, they maintained their benchmark level at 1.5%. This time there's a likelihood they might hike their interest rates to about 1.75%. Apart from that, we have the ECB interest rates on Thursday. We've seen the ECB maintain the benchmark level at the 0%, and they say they'll keep this level till next year summer. But with the global changes, they might hike these levels. We're not sure, we're yet to see. On Friday, we have the US GDP growth rate, and we're yet to see how the data release will affect the markets, with a special focus on the US dollar. So that's basically it from the fundamental space, and Ken will take it from here.
So hi guys, today before we go down to the chart breakdowns, we thought it was wise to share with you some education about the Forex trading industry, both for the investor and for the retail trader. 2 weeks ago, I and Caleb had a meeting with the Capital Markets Authority, and in the meeting we got to discuss about the Forex industry, some of the good things that were going on and some of the bad things that were going on. Highlighting on some of the bad things that were going on were that there were traders who were trading for other people without acquiring a license, and there were brokers who are trying to act as brokers without acquiring also the license. There's only one broker who has been regulated in Kenya, and it's GM Securities. You can also do your due diligence on that. For the investors, guys, both for the investor and for the retail trader, I think it is wise before you start even trading for you to familiarize yourself with the Capital Markets Act. These are the regulations that you'll be going through, and these are the regulations that you'll be working under. Under these regulations, there are some of the key clauses, like you cannot trade binary options, you cannot invest or manage other people's money without acquiring a license, you cannot serve as a broker without getting a license, and there are also other things before you get the license you need to meet. So those are some of the clauses. For the investors, guys, before you give out your hard-earned cash, because you have worked for your money and someone comes to you and tells you there's this thing trading and you can make some few chips, and it's a good idea and you can make money. But before you give out your money, understand that the person needs to meet the necessary qualifications for you to give them your money. Otherwise, guys, you're operating in an environment which is, if you give your money and you have not yet gone through the regulations and you have not yet gone through the qualifications, you're doing it illegally, guys, and you might face jail term of around 6 months for the several laws that you'll be breaking. So those are the few regulations that I'll perhaps highlight for you guys. Take your time and go through the regulations, both for the investor and for the retail trader. For us, we took the time. You can also visit the Capital Markets Authority. Their offices are situated in Upper Hill, just right after TSC. When you alight at TSC, their offices are just there. And when you get there, those guys are really friendly. They'll get to share with you the information, and they'll get to highlight to you everything that you need to meet in order for you to become a money manager and understand the speculation business. Another thing that I'd highlight is for the traders and for the investors, guys, we are the ones who are responsible for cleaning up the industry and making sure that whatever we are doing is right and legal. It's always an uphill task for you to do the right thing, guys, but always remember, long term, it pays. So that's just one of the few things that we'll share with you. And I think now I'll just go down to the chart breakdown. Hi guys, we're down to the charts. We'll start off with the euro dollar, the weekly chart. This is the weekly chart in front of you, and we can see the last 2 weeks were quite indecisive. We had 2 high wave candles retesting the 21-day moving average again before heading lower, but you can see that we tried crossing over and unfortunately we were unable. So what do I see ahead of the euro? Again, I'll revisit this Fibonacci of mine. About 2 weeks ago I had highlighted about this Fibonacci, but yeah, so you can see we're capped by the 78.6 and we have been going lower, guys. So if we are able to close below this pivot point, a solid close below this pivot point, then you can see the euro might print lower lows, taking out this initial low and going lower. If I go down to the daily charts, let me go down to the daily chart and show you precisely what's going on with the euro. On the daily chart, so yeah, this is it. This is the daily chart. So on the daily chart, I'll get this one off first. We had this return move from the S2 level, the 1450 mark, going higher, retesting the 21-day moving average, going lower. On Friday, we tried to go higher. Yesterday, we retested the 8-day EMA before going lower. So if we get a solid close below this mark, the 1450 mark, which the euro is still trying hard to do, and I perhaps expect a break of this level heading lower. Can see some bearish momentum coming into the markets, and do not be very quick into executing short trades if you are not inside the trade, especially so because you might be buying at a bad level and the markets may turn. So you can see we were capped by the 50% moving average. We had a retest of the 21-day moving average again, and we went lower. We broke past S2, we went higher again, we are going lower. So if we break below this level and a solid close below S2, meaning at least I don't want a close of 40-50 pips below 1450. So perhaps if you visit the 1400 and you get a close below that mark, today's close will be crucial in determining the sense of direction in this pair. Then you may visit 1330 and you may even head lower to 12670 and ultimately this mark. But that's long-term target. So guys, 1330, I'm looking for 1330 if you get a solid close below this point. If I go down to the lower time frame, the 4-hour time frame, so yeah guys, this is the 4-hour time frame. Let me get this one off first. And yep, my chart is left like that. Yes, on the 4-hour time frame, as you can see over here, we had this move. I remember as I was shooting the video last week, we were going higher, had a double tops, then we went lower all the way to 1450. We came back yesterday, retested this mark, and as we retested that mark, this was a Fibonacci pullback, a good entry level with a shooting star candle signifying some bearish momentum might be coming into the markets. And look at what happened. Boom, we are going lower, and we may perhaps see the markets visit this level and even head lower, especially if we get a close below this mark. Currently, London has just opened, and we can see the 4-hour candle is striving to go lower. We had some bullish momentum trying to go higher, but you can see now that there's some bearish momentum pushing it lower. So we may see a break of 1450. In fact, I'm favoring a break of 1450, and the markets may head lower to 1330 ultimately before the end of this week. So yeah, that's my bias on euro, and we can look at DXY on the daily chart here. This is the dollar index. This tracks down the performance of the dollar compared to other currencies, with the euro comparative 60%. So yeah, last week we had this rejection of the moving averages, a pullback, also a rejection of the pivot point. A lot of confluences are lining for a bullish play. Using my Fibonacci, trying to get where we were going. You can see we have not yet completed the pattern. R2 was capping, but you may see a close above R2, and the markets may visit this level, the 96.8 mark, before going lower. That gives me a further confirmation that you could see a drop on the euro. And so let me wait for the close above the R2 mark as I wait for the close below the 1450 on this pair. So I'll head down lower to USD CAD before finally doing the two commodities, and that will be done for the week. Yeah, so this is the dollar compared to the Canadian dollar. So yeah, my weekly chart, a lot of markings, do not worry. Market structure, understanding the market structure. You guys, once you enroll in the course, you get to learn how to map the market structure in order to understand what the market are doing. So yeah, we can see the higher lows and higher highs formation. We also have lower highs coming, formation of a Gartley pattern. I won't go into detail into that. You can search for yourself what Gartley pattern is. And we were capped by the 61.8 mark, resulting to the formation of this new higher low and the pivot point. Finally, we can see some bullish momentum coming in. It may seems like they'll cross over back to the upside. A break of 1.32 and a touch of R1 is possible, or a touch of 1.3623, and so we might get some bullish momentum going further. So we may see a break of this mark, the 1.32, and head higher. So yeah, that's my USD CAD long-term bias. I'm looking for 1.36 perhaps before the end of the year or early next year. And if I go down to the daily time frame, let me just click on the daily time frame. Yeah, so on the daily time frame, guys, you can see we have this lower highs and lower lows formation. Recently we had the formation of a head and shoulder, and I'll show you the head and shoulder using this tool. The last time I talked about a head and shoulder, someone told me he never got to really understand, and we are here to serve you guys. So yeah, so this is the head and shoulder, guys. You can see how nice trading view is. It helps you in mapping out these things, and you can see now we are getting to the neckline, a horizontal neckline. Perhaps you can even print it at that point. Yeah, so if we can be able to close above this point and go higher, which is happening, a significant bullish momentum. You can see these candles don't have much bullish momentum, unlike these two, so it shows you that some supply is coming into the market at this point. So a good solid close above and a break of this trend line would signify the visiting of R2, and I'd be waiting for R2 to execute a short trade, because as much as you're waiting for this head and shoulder to fulfill, do not forget that we have this ABCD pattern, which is almost complete, and a push to R2 will signify a short squeeze of those who are already executing short trades and a better entry level for going short. So if we can be able to get the market to visit this mark, then I'll be waiting for a short play to execute to this mark, but that will depend if we get a straight leg to this mark. If we get some bearish momentum coming into the markets from where we are, then I'll be waiting for 50% mark going higher to 27.2, which will also not be a bad trade. And I'll perhaps go down to the 4-hour time frame to show you this trade in a better manner. Yeah, so this is my 4-hour time frame. We already have a channel marked, and you can see we already have an inside bar candle, as you can see from this candle in the 4-hour charts. So the ABCD pattern is already complete using my Fibonacci I've measured, and you have seen it's already complete. So if you get a close above this point and a close above R1, that when we visit R2, which is almost 80 pips away, not a really bad trade, but I wouldn't advocate for you executing this trade, and especially holding it if you're a newbie. But looking for short trades at this point will be a good idea. If we get a close below this point, a solid close, and the moving averages to cross over, then you may visit pivot point and even head lower to this mark, touching the trend line the third time before going higher to make these newer highs, and that would be marked by use of this Fibonacci. Will be marked by the use of this Fibonacci. Yeah, so if we get perhaps we get some close below intermoving averages, then I'll be executing short trades to this point, 99 pips away, before finally going long to the 1.32 mark. So long term USD card long, short term I'm waiting for that. Then we can perhaps look at gold before looking at oil and finally summing up our day. So yeah, this is gold. I'll just click on the weekly chart, and this is the weekly chart on gold. Last week we saw a retest of the 21-day moving average, and honestly expected some bearish momentum, but the market seemed to be proving me wrong, and you can see bullish momentum is already coming into the markets, heading higher. We may see the markets visit 1240 or 1245. Ultimately we are looking for 1265 if we get a break above 1240 and 1245. So that's my insight on gold, but I'll go down to the daily chart. So if I click on the gold daily chart to understand, on this gold daily chart we have some consolidation. Actually, after this breakout candle signified that we had some bullish momentum coming into the markets, we have had some consolidation at this mark, the R3 mark. This means that we could be getting some short squeezes, especially since most people, I'm sure, had executed short trades, and you could perhaps see a short squeeze to 1240 before heading lower. Anyway, that's gold, and we're in this consolidation. You can see that today's open is currently pushing higher, and you could see some bullish momentum to 1240. So I'm looking for 1240 and ultimately 1265, which is this mark, the 1260 1265 mark, if we get a close above 1240. So yeah, that's gold on the daily time frame. If I go to the 4-hour time frame and show you precisely what's happening on the 4-hour time frame. On the 4-hour time frame I had this inside bar formation, and then we have this trend line with the higher lows marked. As you can see, we have the first higher low, second higher low, the third higher low, so finally having this bullish close. So basically an inside bar candle. For the inside bar candle, how do you trade it? You wait for a break of this candle, and a break in any direction is possible. So if we get a solid close above this point, then I'll be quick in executing my long trades. If we are not able to get a close and instead we get a shooting star, then I'll be executing short trades, pushing the markets lower. So on gold, I'm still waiting for some close above this to signify the bullish momentum that will be coming into the markets, and perhaps to push the markets higher. So Gold, I'm still patient. I'm waiting for this pair to show me where we are going, but I'm favoring the upside due to the candles that are forming. These are very strong candles signifying some bullish momentum. As you can see, we had this candle. At least we have some strong bullish candles signifying that we could be getting some bullish momentum back into the markets and heading higher to 1245. So a solid close, I'm looking for 1245. So I'll sum up the day with oil before we do the wrap up, because this is oil. I'll just get this one off first, then we'll look at the weekly chart. So this is the weekly chart on oil. No, there are not very many levels on this pair that I've marked. It's a commodity actually, oil, and oil is really fast moving, very directional, affected by fundamentals. So there's a lot that comes into trading with oil. So once you decide you're trading oil, pay special attention to those things. Anyway, technically higher lows, as you can see, are being formed, and higher highs, and the recent high was formed at the 76.8 mark, spiking higher, and they've been going lower. So perhaps the possibility of a new low expected at this mark, the 67 mark. And if I use my Fibonacci again, try to get that level. Yep, to this mark. Yeah, so we may see the markets visit the 78.6, which is the 76 mark, touching the trend line the fourth time before going higher to touch $80. That is also a long-term trade. I'm not expecting that to happen within 2 weeks or 3 weeks. That would be insanity in the markets. Maybe before next year, first quarter of next year, we could see oil visiting $80 if we get to respect this level, and you can see a conversion to higher highs expected in the markets. So on the daily chart, short term, on the daily chart, and on the daily chart, we also had this trend line. We first had this trend line, which I thought would be respected, but what happened, we had a solid close below the trend line after bouncing off the third time, trying to go higher. What happened is we had a solid close below the trend line, nullifying this trend line. So what am I currently watching for on oil? I'm watching for S2, 67 mark, potential 180 pips to the downside. As we get a close below S1, we may visit 67 mark before going higher. If you are not able to get a close below S1, then you can maybe wait for oil to revisit some mark, at least the 70 mark, pulling back up at least for some time before going lower. And if I go down to the 4-hour time frame, I can show you what has been happening on oil. I remember last week highlighting to you this consolidation and telling you to wait for the breakout, and hopefully you guys just followed what we said. You waited for the breakout and made some pips, or you did what you normally do and made some pips. I'm also not advocating for you just following these things blindly. Make this useful with your own analysis, get to understand our insights, and mix it with what you have so that you guys can be able to make better decisions. Anyway, we had this consolidation, then we had the break. Finally, we went lower, and again we have a consolidation that is forming at this S1 mark. So you can also wait for the consolidation to finally make the decision. If we get a break above this 70 mark, then you could maybe go up, but if you get a break below the 70 mark, then you could be visiting the 66 mark, potentially getting the 180 pips I was talking about. So yeah, those are just some of the few setups that you guys may execute during this week. And before we close, we can perhaps do a wrap up of the pairs that I've gone through before we close. So yeah guys, just a wrap up of what we've gone through. For the euro, you can see already we are refusing to close below the 1450. If you get a solid close below 1450, I'm favoring short term. I'm favoring bearish momentum. If we don't get a close, then I'm waiting for bullish momentum to come back in, looking for 1550. Ultimately, a break of 1550 will lead me higher. So yeah, so that's euro. And I think the euro sums up pretty much the dollar index. USD card, you're waiting for at least some bearish momentum to come back in, pushing it lower. If you don't get the bearish momentum, then you can expect R2 to be hit. But if you get the bearish momentum, which will also be this Fibonacci, can expect a third trend line bounce. So guys, I've highlighted to you all the possibilities I can see on this pair, including a break, a rejection, and such things. If we get a move to this point, then a good 200 pips to the 1.32 mark before having to finally go up. So yeah, that's USD card. And if I go down lower to the other pairs, gold, as I earlier indicated, on the 4-hour time frame, we have the inside bar. If we get a solid close above, which would also be a short squeeze of this point, then I see 1240 ultimately before going lower, or 1265 if we get a break above 1240. And then the 4-hour time frame, I've told you guys, let's wait for the close above this inside bar formation. If you get a clean close above the inside bar formation and above R2, then you could be heading to 1245 and perhaps even make new highs. So yeah, that's gold. Oil, just like I've told you, we have two consolidations. Let's wait for the consolidations to be broken and we can make the decision, but I'm favoring 67 mark to the downside. This is the mark, 67%, and I'm looking for, if we get some bullish momentum, if we get a close above this, then you can perhaps expect that that trend line bounce at the 71 mark if you're able to close above the 70 mark. So yeah guys, we have highlighted to you all the possibilities that we have and hope that is helpful and hope that you'll incorporate that with your own analysis. You can also check out our website at Financial Hub. We also update some of the content that we have, and we also update these plays as they play out. Perhaps tomorrow I'll give out a gold update and other pairs as the markets tell me we are supposed to go to. So I'll leave it at that and Caleb will take over from there.
Hey guys, I hope you're having a lovely week. I hope the markets has been taking you well. So today we'll just dive in a bit deep into, not really deep, but just highlight a few things that I'm seeing happening on the Aussie dollar and a bit on the EA. So basically we've been having this beautiful downfall ever since the beginning of the year. We've seen this time and time again. And currently what has been going on, we saw Aussie dollar create an yearly low around 0.7050 around down here, and ever since we came back, we rallied back up, had this beautiful pullback, and we found resistance at the 0.7150, and ever since that the market has tumbled down. And if you notice, you can look at the formation of the lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. And if we go down to the 4-hour chart, because this is the daily time frame and it's not really clear what's going on, but on the 4-hour chart I have sort of a ranging market, and as you can see, that's what's been happening. We had this false breakout around here and the market went back up and tapped 0.7150, but the real resistance that we've been having is 0.7130. And basically the market bounced off one, came back two. Once we came here, the market found a bit resistance while it was coming up. We had this slight breakout 1, 2, 3, 4 times, and now we rallied back down the whole of yesterday and earlier on today. We came back down to our lows around 0.7050, where the market seems to be finding support, a base. So we've had that. We might have another pullback back to the upside. Let's just change that to red, and yeah, we might have that pullback back to the 0.7130, or if the market doesn't rally back up, then we might have we might break and go to our target that we've been looking for a very long time at 0.700 down there. That's what I have on Aussie dollar. Basically we can also rally back up and come down and have that. So we might come and have that base and find base down there and consolidate around here for some time before we get the real direction. But for now, this is what I'm seeing. We might have another pullback up to 1.7130. We might even spike to 1.7150 and have that free downfall all the way to 0.700. And that's basically it, what I have on Aussie dollar for the meantime. Now we can go and look at EA. So just to add on that, guys, before I go down to the EA, we might have, if the market doesn't really break these barriers, we might have a bouncing off of this ranging market for a while, till we find direction, maybe till the release after NFP, which is coming out soon, in the next week or two. Not to check the dates, but it might be next week if I'm not wrong, as this month ends. But we might have that sort of consolidation, maybe have that spike around here, because it also acts as a good resistance level before we finally get that advancement down to the
and acceleration down to the 0.7000. So that's basically what I have on Aussie dollar. Another perspective that we may have is we might have another bounce of our trend line. As you can see, this downward trend line that we've been having for some time, we might come back and also maybe sorry about that, maybe we can have another spike up there, sorry about that, before we have that real quick downfall. Long-term perspective on the upside, not really in line right now, so for now we might hold and look for short-term trades to the downside, where we might find support and base around 0.700. So yeah guys, this is EA Euro Aussie, and also we've been having a good pair of late, respecting our key levels and always spiking around that level and changing direction. So basically what we have on EA is, if we look at our daily time frame, we had this double top around here, and we saw this some time back where market found support at around 1.6350, where market has been spiked not once, not twice, not thrice, but 4 times before dropping to find support at 1.6050. But if you notice and look well, we've been having a series of higher lows. We had this higher low, we came and had this higher low, we came and had this higher low. We're finding resistance around here, not really forming higher highs, but there's potential that may happen. And if we go to our weekly time frame, what we'll see is that we're stuck within this inside bar. Some people call it haram, it depends what you call it. And as you can see, we've been inside this bar, and we had this retest around this region. As you can see, this was a good support region. As you can see, it was spiked once, twice, thrice, for which spiked really strong below, and now this time, but not closing below it. And if we draw our Fibonacci from this, we can see we retraced to a 78.6 level. As you can see, we're still trading within the inside bar, and we had this beautiful retracement to a 68.6 level, which the market immediately rallied back up. After that, if we go down to our 4-hour time frame, we had a beautiful sorry about all this mess, but try and keep your chart as clean as possible. And as you can see, this was beautiful. It's sort of a ranging market, as you've seen in the inside bar. This whole region is a consolidation sort of level, trading within the inside bar. And as you can see down here, 1.6050 is acting as a really good support. As you can see, it was tested down here, we had this spike below, which was a false breakout, and we had this beautiful touch before the market rallied back up, and ever since we've been having this uptrend. Our target right now is around, I might have another look at 1.6350, and in line with our Aussie dollar, which is consolidating and targeting the downside. So we might have a pullback all the way to this level. If not, we might because if you can see also in the 4-hour time frame, we've been having lower highs. We might have another rally back to this level, but we're mainly looking at the daily time frame to know where to give us a sense of direction. When you go down to the hourly time frames, anything happens. So we're still looking for that. As you can see, we saw a series of higher lows, here, high low, another high low around here. No potential. The overall direction is uptrend. We're not seeing any strength from the bears apart from short-term trade, but on the long term, we're looking to target around this level. In the long term, if we have a break above 1.6350, remember we're targeting 1.660 up here. So that's basically what we have on the Aussie, what we have on the EA, and basically we'll see how the trade goes. You can get good entry setups, and we'll see. Next week we'll cover up and see how the market has been doing. So I hope you guys have a lovely week. I hope you enjoy the weekend, and may the peeps be with you.